Staying put with the opening moves, so we're still down about 50 odd points for the Nifty futures. The breadth marginally in favor of advances now with Adani Enterprises, ACC, Godrej Properties and AU Small Finance Bank. These are your big winners in trade. From amongst the larger ones, Adani Port, Cipla, Divi's Labs, BPCL and Sun Pharma are seeing some green moves. Under pressure though for Indusine, for Reliance Industries, Tata Motors, ICICI Bank, Titan as well as HDFC Bank. And amongst the liquid universe, you've got an NMDC which is cracked about 4%. There's PVR which is down about 2%. Power Grid and Ashok Leyland as well, which are weighed under pressure as we speak. But it's packaging companies which are in focus, and while there is an all-time high demand for packaged foods as well as medicines, there is a sharp increase in packaging costs as well. So how is it that packaging companies are trying to balance the two factors out? Let me welcome on board Rajesh Bhatia, Group CFO at UFlex, and we also have with us Lakshmana Rao, the MD at Mold-Tek Packaging. Gentlemen, good to have you both on the show. Morning firstly. Rajesh, if I could start with you. The packaging industry continued to remain on its toes to meet this all-time spurt in demand that one is seeing for packaged foods as well as medicines and what have you and other essential goods as well. Would you say firstly that this high demand is going to continue?
Demand, I think we have to see in two parts. One is the COVID-led, which was more because of the stocking at the household ends and, that frenzy. It cooled down a bit, starting from mid-August towards November end. And thereafter, now it's a steady state. So I would say that, yes, there was a pent-up demand, which is now, a perfectly normalized situation currently. But yes, this helped us with the volumes in the first 3 quarters of the year. Q3 especially, we saw that, we were up about by 20%, our overall portfolio of packaging and the packaging films. So it's been a great run this year so far.
Right. Mr. Rao, Mold-Tek is a proxy on growth potential in domestic paints, food, as well as FMCG. Help us understand what are the demand trends that you're witnessing on ground and whether or not you foresee the demand to continue.
See, in our case, the most of the demand is shifting from other means of packaging to rigid containers. That is why I see that it is not a one-time phenomenon. It's going to happen for the next few more quarters or even years, because what pandemic did for packaging is there's a more concern for hygienic packaging. Food should reach safely. They should have counterfeit features, and product should be manufactured in a process where there is no contamination. So the concern for hygienic packaging is increasing. That is a field wherein Mold-Tek with its IML robotic operations is all positioned as a leader. So what we noticed actually, even in the Q1, there was no drop in our sales in the food and FMCG, rather there was a growth. And the same trend is continuing even in these 2 quarters later, after the pandemic, that's a peak of the pandemic in April to June. We are noticing the same trend is going on. Even smaller companies who in the food and FMCG space especially wish to move towards IML containers, which are manufactured in a very hygienic manner with robotics. So the trend for this kind of change might remain a little longer and can become permanent.
Sure. Mr. Rao, in terms of the kind of revenue outlook you have going forward as well, the kind of impact on margins due to the increase in cost, any estimates you can give us there?
There is a sharp rise in raw material prices in the last 3-4 months, but fortunately we could pass on majority of the price rise to our customers, because they understand that this kind of price rise cannot be absorbed by industry and it has to be passed on to the final end client. So that's how we are able to get it. And but of course, it will have some impact on the growth, but we don't see anything really falling in terms of demand trend. But there could be some impact on the raw material price hike on overall margins, which could have otherwise improved further.
Okay, and where do you see the maximum growth going forward as well in the slightly longer term? What about the export market, the kind of outlook you have there?
Yeah,
Rajesh, that one's for you.
Oh, that one for me. Okay. So I see, with all the projections coming in, from all the researches, we expecting FY22 FMCG industry growth to anywhere between 9 to 11%. And that is what will get mirrored in the packaging industry as well. And, we also have installed additional capacities in our overseas. So they'll also come handy in terms of giving us, the higher revenues. So as a very conservative estimate, next couple of years, we see at least 20 to 25% top line growth coming from the increased throughput from our newly set up capacities, as well as, increasing the utilization from the existing one, especially on the aseptic packaging and the flexible packaging side. So I think, as I said, FY21 has been a good year for the industry, both in terms of demands and margin expansion. Mr. Rao said that, last 3-4 months, we've seen a pressure on the input prices. Happy to say that, while yes, there is a pressure, but most of the converters have been able to pass on that kind of a price rise to the ultimate buyers. And because, I think the price rise has been too steep, led by some of the capacity shortages, and it will only expand the margins in the Q4 as we see it now. But, these things won't remain for very long. They'll get normalized, in the next quarter or so. And then, we're still looking at healthier margins. We've seen industry-wise, if you see all the packaging players, they've reported between 25 to 35% kind of an EBITDA margins, which were not heard of in many years. So yes, going forward, there'll be expansions coming in and there'll be new capacities getting announced. So on a long-term basis, with an EBITDA margin of about 18 to 20% range is what is the sweet spot for our industry. And packaging, yes, we need to improve our margins. The industry there needs to consolidate more. We thought that, it would have happened by now, but not. It will take a couple of more years before, the flexible packaging industry is able to, ramp up its margins as some of the capacities get, consolidated.
Okay, Mr. Rao, Rajesh, great to get in that insight from you. Good to have you both in the show. We'll let you go on that note. In fact, take a very quick break, come right back. Lots more lined up.